Jan, you've got your fingers in so many things, but SMH, biggest semiconductor ETF out there. It is market cap weighted, and the important thing here about, I want to ask you, what are we up, 35% this year?
Something like that, yeah.
But it's extremely volatile, obviously, and it's still getting inflows. I looked at the other day, people are, what's this telling us? Investors are not giving up on tech at this point at all.
They're not giving up on AI, right? And it's a big topic here at this conference. It's a big topic daily, everyone. How am I using AI to make my work life easier? And NVIDIA captures, I think they say 120% of the profits of the AI trend. So semiconductors are a great winner. We just launched a sort of sister fund that excludes the integrated, so it's SMHX, so it's just the fabless semiconductor companies. So because why spend billions of dollars on building the chips if you don't have to? Like NVIDIA doesn't build its own chips. So that's another kind of investment strategy. But people, it's built in their core. John and I were talking about this before. It's like part of people's model portfolios, their core portfolios, is to have this tactical overweight to semis. And some of our biggest clients actually bought on the dip over the last week or two. It's kind of amazing.
It doesn't die. And of course, you're an old commodities guy, and you run GDX.
Yeah, let's talk about the best investment so far this year, right? It's the hedge against...
You never
no, it's the hedge against political uncertainty.
It's the hedge GDX here is the gold miners ETF, folks. He's about to give a big pitch for his thing.
No,
Go ahead.
Everyone's nervous about the election, increasingly. And more than that, the fiscal spending issues for next year. How do you hedge? It's obvious you buy some gold. No investors are talking about it really, but it is quietly the best performing asset this year. Bitcoin's right behind it.
Now I have to ask you to make the distinction you and I always make between gold and the gold miners. The gold miners being stocks can perform a little bit differently than just gold. Can you make that distinction? Yeah, educate the viewers about
Sure, GDX tracks the gold mining companies, and like other commodity producers, their valuations are at least multi-decade lows. For some reason, investors are piling into bullion. I think.
But isn't it cleaner just to own, like, a gold ETF that holds gold rather than the gold miners that are subject to the vagaries of stock market whims? It's not illogical, is it?
It's not logical, but the big money.
It's not illogical.
The big money recently has been from foreign governments buying,
yeah.
And what blew gold through its all-time highs last Thursday, a big technical breakout, was rumors that Saudi Arabia was buying not only what they reported, but also over-the-counter markets through Switzerland.
Yeah.
So foreign governments, yes, they're buying bullion, they're not buying the miners. I think you own both because the miners, if they catch up at all, it's going to rip, and they did on Thursday.
He still manages to get in a plug for his fund. It's amazing. Your point here, though, I want to make it a very important. Central banks have become much larger buyers of gold because why? They want to diversify their foreign reserves?
Yeah, our world is de-dollarizing. In a word, over the next decade, the dollar will become less and less important. India's economy alone in 10 years will pass the size of continental Europe. So we're seeing the fragmentation of the global economy. Those countries want autonomy over their own money supply and monetary policies, and they're not going to be they're not going to use the dollar only in their policies. And gold is one of those other large liquid alternatives.
Yeah. Any thoughts on commodities as another, building a portfolio, okay? Commodities have a place in a portfolio? It's an investment class, does it have a place?
I'll talk about more just stores of value type of assets like gold, like Bitcoin, things like that. To me, the big question is what's the source of expected returns when you invest in a company, when you invest in stocks and bonds. You know that you're giving them capital in order to presumably invest in positive NPV projects. So that's the source of the return. It's not really clear what the source of, there's not really an economic rationale for why some of these assets should continue to have, the returns that they've had.
Yeah, I never got the gold as an inflation hedge story because I can't see the correlation very well. I understand gold as gold is money. Unlike Bitcoin, gold has a very strong use case to me. It's not only jewelry and industrial products, but it is a true store of value historically and always has been. So I think gold has been used as money and can be considered a store of value. And so I get it on that basis, but it doesn't throw off any income. It just sits, it's like a collectible. I collect rock posters from the 60s. It doesn't pay me anything, but I like having it, and hopefully the value goes up because some guy will pay me more for my Jimi Hendrix poster.
You're killing me. You're comparing rock posters
I
against
know.
one of the
I'm
major asset
sort of sticking my
classes out
finger
there.
in his eye over there because Mr. Gold is over
They're
there.
great rock posters,
Yeah,
I get
know.
it, but
You've
still.
seen them.
The problem with gold is that there's no source of income.
Yeah, thank you.
So, I mean,
Which makes them great in a falling interest rate environment.
Yeah, there you go. Thank you. I've let this go a little bit longer than normal, folks, because you see these people? We didn't even rehearse this. This is what you get when you get high-level people like this who come to these kinds of conferences and come and sit and talk to us here at CNBC.